Hey everyone out there, welcome to episode 1 of Shey's Way. We're gonna work through a little bit of the turbulence today and get better and better each week. A little bit of disclosure because we're all, well, I don't want to say we're all business owners, but there's a whole lot of business owners that we work with all over this great country. And you know what? I'm remiss. Let me take a half a step backwards and let me just thank Chris Naugle for his friendship, his professionalism, and just his work ethic. And I'm just completely humbled to be part of his team here at the Money School. After last week, I've had a number of my personal professional relationships reach out to me and, hey, who's this Naugle guy? I've never heard of him. And he's got this and he's got that. And what's this Money School stuff? And I looked him up and it sounds like he knows what he's doing and all that kind of good stuff. So hopefully I can just try to bring a little bit of additional value in my background. And then secondary to that, Shauna, thank you for everything that you've been doing and getting me through hosting last 2 Wednesdays ago and everything that you're doing today. So I appreciate both of you. So a little bit of disclosures. Obviously everyone can read, but you know, we live in a litigious world, and I want to make sure that that people aren't out there, you know, running to the bank. And you know, there's crazy stuff sometimes out there that people hear and then they go out and do something and then it blows up. So we're going to share some information, but it's informational purposes only. It's not intended for you guys to go out there and seek or listen to us from a tax or legal or investment or accounting or insurance. You know, consult your own people. And if you don't have people, well, then we have people. You know, I guess I'll take a little bit of a minute right there and just say, you've heard me talk a little bit about people out there have to go find an insurance person, an investment person, and a banker and a CPA and an estate planning attorney. And you have to kind of pull those people together. And you're normally the quarterback. And the problem with that business model, if you will, is that your insurance guy doesn't know what your investment guy is doing, and your CPA is the last person to ever know. And then they're trying to unring the bell at the end of the year, and your team never communicates. So, you know, at the Money School, we've tried to pull different professionals all over this great country that understand that the conventional wisdom is wrong, and that you know, following the herd is certainly not the direction that you want to go. So if you're looking for advice, this is the place to be. Chris and his team have done a phenomenal job and have a number of outlets for you to glean different advice from. So again, there's your disclosure. You know, so again, if you need some advice, reach out to us and we'll get you with the right people. Again, just happy to have Amy Lister, who is a CPA with Better Accounting, that is out of, I want to say Utah. It's just not Salt Lake City, Utah, right?
So southern Utah.
Yeah.
So St. George, Cedar City area. So it's the beautiful part of Utah.
There you go. So let me give you a little bit of backdrop. Amy Lister, she's the president and tax director at Better Accounting. 20 plus years of extensive accounting experience in tax knowledge. She strives to help business owners gain visibility to their financials. Just a great asset to talk about P&Ls, balance sheets. She specializes in helping clients with tax planning. You guys have heard me talk that if you're working with a CPA that you're only meeting with at the end of the year to try to figure out you know, go buy some equipment or go do this. That's not tax strategy planning. That's not tax advising, which is why here we are on February 7th. And I've got her on the show because in my humble opinion, tax planning, tax strategy work happens all year long. Amy has, over the last 20 years, she's had different roles with different accounting firms, but has always came back to working in public accounting and taxes, just due to the fact she just has a variety of people and businesses that she loves working with. And I'm gonna hold off on the personal bio, and if she wants to share some of that, then we can go that direction. So episode 1, and because I'm humbled to work under Chris's umbrella, but at the same time, if there's mud on my face and there's mud on this show, it's going to be my show. And so the buck, you know, it's that the buck stops here. So I'm just going to tell you, some people that know me, I've just recently, a year ago, stopped a 25-year NCAA men's Division I basketball career. And if I can referee at Kentucky in front of 26,000 people calling me everything but a bald white guy, my feelings are not going to get hurt here. But I'm going to tell you, I'm going to speak from the hip. So disclosures. I don't care if you're a Republican or a Democrat, but I don't like the government. So I'm going to beat up on the government. And that's going to happen every week. I'm also going to beat up on banks because the conventional wisdom of running down and using the bank's money is not what we believe here. Taxes and investment advice. Yeah, there's the conventional wisdom of following the financial advisors all over this great country. And then there's different ways of doing it. So we're going to talk about the real world. We're going to talk about money and accounts and investments and protection and that horrible, horrible, horrible thing out there called life insurance that just nobody understands, except probably everyone here. And we're going to talk about not following the herd. If I need to, I can get up in your kitchen and cook on your grill in a heartbeat. So we're going to talk about principles and values and aligning your principles and values with your actions, which is something I've spent the better part of 2 decades helping the people who I have working relationships with. So if I rub your rhubarb, I'm not sorry, because it's going to get real. We'll talk about mature simplicity versus sophisticated confusion, and how I believe in financial planning is mature simplicity. When it gets to be sophisticated confusion, everyone needs Advil at the end of the day, and we're not going to have that here. If you want to know what time it is, I'm probably the guy. If you want to know how we build the watch, it's probably going to be your CPA. And if you're working with Amy, she does a great job with that. I think what we were going to do is maybe start with what are we looking at in 2023 and what are some things that all of our wonderful clients and relationships should be looking at.
Okay, so the first one that always comes to mind for me and my clients, the new ones that come in, they are not doing this. So I just want to put it out there. Put your kids on payroll and how to do this. So there's a couple different ways depending on your entity structure. Let's just start with the basics. So LLCs, just a single member LLC or even a partnership. Maybe there's a spouse involved as well. So with this one's the easiest way to do this. So with an LLC, you can pay your children directly out of the LLC. Because it is a family-based or it's individually owned, we don't have to go through a different way that we would need to do for an S Corp. So in just kind of rules of thumb to kind of follow for this, make sure that you have duties for each child and what they're pertaining to, what they're doing for you. Now, for the younger kids, I wouldn't get too young, maybe 8, 6. We're kind of pushing it a little, but between like 6 and up, and it can be as simple as taking out the trash, vacuuming, dusting, doing things within your office at home or at your office where you go. It just depends on what your situation is. So always have duties. How much can you pay your children? That's a big one. So between, I would say about 6, when they're old enough to, actually do something, a little more than just, toddle around and throw papers around. And because I tried that, it didn't work for my daughter. So we had to wait till she was older. But between like 6 and 12, I would say pay them no more than probably 10 grand a year. Now try to do it on a monthly basis. Try to be consistent, organize their schedule. Hey, it's Thursday. It's time to go to the office. Let's go do your chores, that type of thing. If they are over 14, between 14 and 18, you can pay them up to $14,000. So imagine that $14,000 outside services for them to, help you with your books, help you with your marketing, find an activity that they're interested in. Or, if you have, like my husband had an upholstery business, my daughter was not interested in upholstery, but she was okay with cleaning up. So he would just leave a big, huge pile everywhere. And so she would go clean it up. Hey, upholstery is not her thing. Sewing's not her thing, but, find something that they're interested in. We did graduate her into doing books. So I'm an accountant. That's probably a no-brainer there. Not her cup of tea, but she did learn, because you want them to learn and grow from this experience. One thing I did do with my daughter, I made her pay for her own activities with this money she was making. So she was into dance. She was, into animals, that type of thing, riding lessons, those types of things. She paid for that on her own. So try to think of things that you pay for, that you would normally pay for out of pocket, and help your children pay for those types of things. I think it gives them a better knowledge of finances. And it doesn't have to be a whole lot, pick and choose, okay, you're responsible for your swimming lessons or, something like that. Make them responsible for something and make them save money. I think the kids these days have a hard time with that because it's all about rewards. So try to do that. Now, you can still pay your kids if they are over 18, but you will have to either 1099 them or W-2 them. So if they want to continue on after the age of 18, you can still help them. You can pay them the $14,000. They can go to college, pay for their tuition with that $14,000. I mean, win-win situation there, because sometimes that comes out of parents' pockets. Try to be creative of what they're doing. So Brian, you pay your children out of your S Corp. How's that going for you? I know your kids are older and younger. So What do you pay your children for?
No, I do. And Amy, thanks for the information there. And there's some people here that know I do that. I've got 3 boys. One is 19, one is 16, about to be 17, and my 11-year-old. My 11-year-old has gotten to know my shredder extraordinarily well.
Mm-hmm.
I think he's got a name for it. Calls him his best friend. So he comes in and shreds and takes out the trash and does some things like that. My 16-year-old, I use him for data management. So for some reason, insurance carriers still live in the dark ages. So they mail tremendous amounts of paper, which my office is paperless. So we scan everything into the database. Amy, my question there would be, and I have 2, because I got a question about 2 weeks ago from a client that asked me 2 things. One, what about grandchildren? So the grandparents are the owners of an LLC or an S corporation and want to hire their grandchildren. Are we out of bounds there?
No, you are not. So with an S Corp and with a C Corp, I know a lot of people are asking, okay, what about the other types of entities? We can set up like a little family management company off to the side. So where your C Corp and your S Corp will pay that family management and then the family management can kind of manage those labor and stuff like that. When you open that bank account, it does not have to be an EIN number at first if you don't want it to be. It can be your spouse's social security number. Whatever is the easiest way to get that bank account open. If you do go into the bank and they say, oh, sorry, this is a family management company, you have to have a business license and blah, blah, blah. This is a way to get around that. And then you can go get a DBA and just get that EIN number. So if you do have to do a payroll of some kind, if those children are older, but we can do that family management. The family management will invoice the S Corp or the C Corp, and then the management company can process that payroll, will send it off into the children's accounts. That way they can do that. Now, it can be grandchildren as well. So as long as it's a family member, you're totally good. Paying children, grandchildren, that type of thing.
I was just thinking nieces or nephews, does that count at all?
Yes, but you have to be super careful. Make sure you're really documenting their time and stuff like that. But you're kind of going into that gray area. It needs to be more immediate, but you can on occasion do that if you would like, if you have needs occasionally through the year.
Just wondering. Thank you.
Amy, my second question, and actually you just touched on a little bit there, and it was going to be, tell me a little bit about the bad guys, those IRS agents that want to come audit people or whatever it may be. How detailed do we need to be in regards to the job descriptions and the hours worked and that kind of environment?
So you want to keep a good, like any employee, you want to make sure you're tracking hours, making sure, okay, this is what so-and-so does. Have like a list of duties because they will ask you. I have not lost an audit when it comes down to a family management because of the detail that people have. So make sure you're keeping detailed records of the days, how many hours worked, that type of thing, and what they're actually doing for the money. I mean, I think that's what they're mostly worried about. And that family management will not make money on a Schedule C on your personal return. So it's just kind of in there as a pass through. So you're going to keep bare minimum stuff in there. So that's why generally, if you tend to get higher and higher balance, so where there's actually income, that's when they start looking at it a little closer. So keep it pretty much an even keel going through 0 to 0, basically.
Okay. Amy, last thing, and we can move on to another strategy, but I'm just going to share because like I said, I'm just real. I've been paying my kids, and in my formal life over the last couple of years, there was a CPA firm that when I started, I opened up custodial accounts for all 3 of my kids. And then we were running their payroll through our QuickBooks. And somehow along the line, tell me what time it is, not how you build the watch. We were paying taxes. And then your firm instructed me to move away from not necessarily away from the custodial accounts, but do the family management account. And then that circumvents paying any of it was the FICA that we were paying through the payroll. So, and I want you to speak on this because I see the people that are here, and I know that a number of them followed that advice and had custodial accounts for their children and whatnot. Can you tell us a little bit of the difference?
Sure. So the good thing about having a business is that you have children that you can pay, and you don't have to pay Social Security or Medicare. But if you do run a wage through the business, that kind of changes the relationship between you and your employee or your son or daughter. So we want to make sure we're kind of trying to take out that middle person of where self-employment tax, we don't want to pay those if we don't need to, especially when they're under 18 and that's really not benefiting them all that much. They don't have to file a tax return, that type of thing. So we want to just get away from that and just say, okay, this is the way to save money. Yes, I can still claim all their gross wages, and this is still benefit them on the other side. That's the relationship. It's the relationship. That's why I try to keep it immediate family only, sons, daughters, grandchildren, that type of thing, not branching off into aunts, uncles, that type of thing. So try to keep immediate family. We just want to save on taxes because if you look it up, you do not have to pay your children a W-2 with Social Security and Medicare on it if you do it this way. So it's just a great way to save that self-employment taxes that you don't want to fork out. It saves you money.
I know briefly before we got on this, we talked about it. So you just have to have like their duties kind of listed in the wages. And then like for my daughter's 10, so she would need her own bank account. And then I could just pay her, like write a check, transfer money, whatever is easiest for you. I just did transfers and then just put it to outside services that way, because it's kind of a contractor, or you can do child wages or something like that as well. As long as you know where it's going and your CPA can see that, then they should be able to recognize and do it correctly. Awesome.
Sean, I'm normally remiss here, but I happen to look up and see a question. So I'm just going to bounce it off Amy real quick. 7-year-old child, to pay them out of a C Corp, does it need to be W-2?
You can pay W-2, but then you're subject to possibly those self-employment taxes again. I would set up the family management off to the side and just invoice the C Corp instead. So I would do the family management instead to get rid of those self-employment taxes on that child.
All right. And that made sense because the person said, thank you. So, all right.
Good.
What else, Amy, in 2020?
Okay, the Augusta Rule, how to use your home and have it tax-free. Now, we can take this one back just a little bit into 2022. Don't go too far. But the way to do this is kind of backdate a contract between you and your spouse, or, how you're using that home. You can use that home to coach people. Doing like little events or something like that, depending on the nature of your business. You can use it for shareholder meetings or board of director meetings. If you're a small LLC, those board of directors can be your family, or you can do shareholders as well. In an S Corp, you can also do that as well. You can have a board of directors for either company. That way you can use this. So to wait to use it for 2022, backdate that contract. Everybody takes draws at the last half of the year, correct? I mean, my husband does out of his business. I'm sure Brian did before the end of the year for his business. So is what you're going to do is you're going to take a couple of those, and it doesn't just make sure you make it reasonable, go and do your research in your area of how, like if you were to go rent out an event center or a room somewhere to host these meetings, how much is it going to cost? $500-$600 or $800-$900, depending on the city that you're in. Take that, put it in your contract, and then go back to one of your draws and reallocate some of those draws that you took and put it to office expense. That way you can at least do October, November, December, do like the last quarter. I will leave it up to you if you would like to go back further than that, but I don't recommend it because they do tend to look at it if the check was actually written to and for the dates that you have on those meeting agendas. So moving forward, though, you can do it every month. Now, the trick is not to do it over 14 days because 14 days is the max that you can rent out your home and not count it as rent income. So this is the key, even for small LLCs. I don't know if I would do it every month. Make sure you have a plan, but a small LLCs you can do, once a quarter or something like that instead. But S Corps, and if you're a larger company, do it once a month. Have those little events that you can bring in, special parties. I think one of my people were hosting like a little production space where they were taking pictures and doing commercials and stuff like that. So make sure that you're using this and make sure the contract is in place and make sure that you're documenting what happens at those meetings, who attended, document it, put it in with your, little black book of all your legal docs. Now if you do not have a board of directors, it's really simple to add a board of directors to your minutes. Basically at one of your board of director meetings, hence yourself, maybe at first, you're going to write down, hey, Amy Lister has a meeting at this time. She is going to add to her board of directors, and lists those. No, they can be family members. They can be your children, just depending on what is the nature of your business. So use it for your benefit. You can use it also for travel purposes as well, those board of directors, and we can get into that at another time. Or if you want to talk about it now, just give me a call and we'll set up a consult or something with Brian and get that going for you. Just use it to your advantage. Don't get excessive with it. If you have questions, give me a call. I can walk you through how to set it up and do it there. But that's a great way to, get an extra $12,000, $14,000 a year towards rent expense or event expense, however you would like to list it on your P&L.
Amy, great point there. A bunch of chat, and Chris, I appreciate you answering some of the information and plowing through some of this. Real quick, I want to talk a little bit more about the Augusta Rule, but I did want to make a comment. Ryan threw in the chat that regarding very, very young children, right when they're born, put his kids on the payroll immediately. A lot of that's a head scratcher for a lot of people, but you can use children as models. Put them on your Facebook account, put them on a magazine, put them on the company website is where you would find my little guys. I can't even recognize them when I saw their photo a couple months ago when I looked at it. I was like, who are those kids? So yeah, you can certainly use your kids. And Ryan, I appreciate you throwing that chat in there. Amy, speak a little bit about, and I'll just, again, being real, my wife and I use the Augusta Rule. We have an S Corp, we have an LLC. Just from a paper tracking standpoint, Amy, just talk a little bit about that. I'll just give you what we do here. Most people know I live in Gainesville, Florida. It's a college town where the University of Florida, where the Gators. We did a little bit of research, and my wife and I were small business owners. So small business owners talk about business every day. So if we were going to go down and rent a room at a hotel, we did the research on what that would cost us, kind of took the high, the low, the medium, and took an average. And my wife enjoys getting an $800 check on a monthly basis. I'm not so sure where that money goes, but I think Amazon gets most of it. But can you talk a little bit about the paper trail that people should use, or at least if they're using the Augusta Rule?
Okay, so you want to make sure that you have a rental agreement or an agreement of how you're going to use your home for business purposes. So make sure you do that. Submit an invoice. An invoice is a great way to track it. and then you can get reimbursed. You can reallocate draws if you want. If you're kind of strapped for cash, you can just reduce your draws for that month and do a check instead. So just kind of a ways to juggle that a little bit, and just make sure that you're coding it to rent expense on those topics. You just need to make sure you're keeping a track of where that agreement is. So I always say, keep it with your legal docs. Just kind of make a little portfolio on your computer, print it off, sign it, scan it back in, take a picture of it somehow. Always do that. So do rent expense or an office expense. It just depends on the nature of your business of where you would like to put that. I would talk and see if you have a different CPA where they would like you to see it. I like to put it as rent expense. If you're using the Augusta Rule, I use office expenses a different ways. So I use rent expense myself, and most of my clients do, unless circumstances don't allow them to do that. So, and then I use office expense for that if it's just a small amount.
Okay. Amy, I think I know the answer to this, but I'm going to let the stamp on your forehead of CPA answer it. But the question, I think it's pretty straightforward, but can you take advantage of the Augusta Rule if you're renting your home?
Yes, you can, because it is your lease. Does that make sense? You can pay yourself a lease. You can rent out rooms out of a rental. I even do, if you're an LLC and just doing a home office, I still do a home that's being rented as a home office as well. So it just depends on how you would like to use that home, whether you're going to use it for the Augusta Rule, home office, other stuff like that.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up.
Hey, do we want to stay on 2023 or hit a few at the end of the year of last year?
So I think we need to hit on meals and entertainment, because that's a big one that IRS is really looking for. And this is one that you can actually go back and say, okay, did I catch everything? Because they did have that rule, and I'm not sure if everybody knew about it, honestly, that if you were taking a prospective client or existing client out for dinner or a lunch at a restaurant, that could actually be written off at 100%. I'm not sure if everybody knew that. And there was actually some other little things that if you were going out to a restaurant, and that could be DoorDash, and it could be, as long as it was outside services type thing, you're not fixing it in your home, that you can use them 100%. So I just want to go over those really quick so you guys can go back and say, okay, did I take advantage of this? Because some of my newer clients are not. So we actually kind of revamped. We went through their draw section. So we used some of those. So I just want to go through them. So meeting with clients and prospects. So prospective clients, existing clients, if you went out to a restaurant, those are 100%. So on my books and the people I do books for, I actually have 3 categories under meals. I have 100%, 50%, and non-deductible. So that's how I classify them. So there's no way that they're misunderstood. So that's one way of doing it. For those that have employees, if you were bringing in a lunch, or you were having a meeting with a client and lunch was served and your employee was there, those are 100%. Let's say your employee went out and it was for a business meeting and it straddled lunch and they went and got lunch. That is actually 100%, and you can pay for it for them 100%. So make sure you're taking care of that. Meals while traveling. Now, this is a new one. If you went out to a restaurant while you were traveling, and it has to be more than 50 miles away from your home, you can actually use that 100%. So this was a big deal for a lot of clients that do travel. Most of those are at 50%. So please make sure that those, if you're going to a restaurant, that you did classify those at 100%. Some people like to mix a little entertainment like golf with drinks or meals. Make sure you're paying for those separately, because then you can write the meals out at 100%, and then the entertainment portion of it is non-deductible unless it was for networking or an event of some kind that you had multiple clients there. Try to use that to your advantage a little bit, but if it was just you and a client going, the meals are 100%, the golfing is non-deductible. So just as an example. And then moving forward into 2023, those are null and void. with a lot of them, unless the majority of those were employees. The rest of them all just got knocked down to 50% again, unfortunately, for 2023. But take advantage while you can for 2022. It's still in effect. And I can send a little chart over to Brian that he can send out that kind of outlines the same thing.
Awesome. Not seeing any questions on there. Shauna, did I miss anything that you saw come through? I just want to mention that Chris Naugle's got mad typing skills, by the way. I'm slightly impressed. I was thinking he'd be like this.
I am slow, but I get the job done.
I think we're okay. There is one question. I feel like we did hit it though. Morgan in the Q&A says, with a family management LLC, is there a limit to how much the management LLC is paid for services?
So really that's on an individual basis. So the management is not there to make money. So it's really just there to help funnel that money in to pay the children. So it should be bare minimum in there. So whatever you've decided to pay your child for the year, just kind of add it up and make sure you're only transferring that amount into that family management.
Amy, I got a quick question for you too. I had heard about that meals stuff, but most business owners are so busy just running in their business that, they just kind of take all the receipts, they put it in an accordion file or maybe a spreadsheet. And at the end of the year, they push it off to their CPA. I mean, and I know you can't answer this, but what do you think the chances are that most CPAs are going to pick that up and then say, okay, we can only take X amount of deduction for these, or like where's the line on that? Because business owners just don't have the time to sit there and nitpick these little things that the IRS.
No. So rule of thumb, most CPAs do not have time to go through every receipt. So this is what I recommend my clients doing. Take a picture of that receipt. And I have an online portal that they can just drop things into. So if they want to just take a picture of it, tell me write on it what it was for. So if it was for a client, something that's a little more than just 50%, write it on there, take a picture of it and slide it in their portal. Especially if I do their books, then I go in and I look. That's when I do it, is when I do their accounting. At the year end, it is truly up to them to tell me, because to go through every receipt, especially if you go out to dinner a lot. And some people really do, like they go out for coffee and they go out for this and they go out. So it tends to be more. So it is on you guys to do that. I try to do the best I can. I do ask questions back. So it really just depends. If you're even questioning whether it could be 100%, just say, hey, what do you think of this? At least I can just stick it in the file saying 100%, 50%, that type of thing. You can just drop it in my filing system. That's how it works.
So this is why they hired like 70-some thousand new IRS agents to nitpick this nonsense.
Yes. So the number one thing that I have been seeing that they're being audited for are payroll taxes. Do your payroll taxes match your 941s that are being submitted? Are your numbers the same? It's a big thing that they're watching. Then they dig in, and meals is a big one. Meals and entertainment. I don't know why I think people abuse it a little bit. And I think that's why they're so on top of it. If you don't have it split for non-deductible meals, 100% meals, 50% meals, they will scrutinize that. But they will get in the door with something else first, and then they will nail you on the meals and entertainment. So that's what I've been seeing. This is kind of an important question for many of the people on here. I guess maybe selfishly, maybe for me. For lunch or dinner, you get a couple beers. Can that be allocated toward entertainment? Because I would think that counts as entertainment. Just asking. It just depends on the nature of the meal. Are you there with a board of director, AKA your spouse? Are you there, with people, or are you just there to have a beer before you go home, or just to chill? Those are more entertainment purposes. But if you're with someone, you can include the drinks with the meal. But it will be at 50%. But hey, it's 50% instead of 0. But I actually encourage, I take a look at my people's meals, and I say, okay, well, we don't have a lot of can we move just a little bit down into the non-entertainment, non-deductible section, just to show that, hey, we are looking, but not necessarily every single receipt. So I try to manage that when I prep the tax return. And I don't know if all CPAs do that. I just do it because I know people are looking at it. So good information. So if I'm just playing the math, if you only get 50% of a deduction, well, then you just got to have 2. Exactly. Seems like right. Go out twice as much, right?
So I work with Amy's firm, not only from a tax return standpoint, but they also handle all of my payroll. And then I work with Rachel on her team, and we go over my P&L and balance sheet on a monthly basis. Unlike Chris, I don't like paper. So I don't keep receipts. I don't have a piece of paper. I don't take pictures. I have, remember, mature simplicity. I'm not that smart. I'm an old referee. So I have a business credit card and I have a personal credit card. And as far as I know, I use the business, I use my personal, and I'm hoping that Rachel on Amy's team, she's doing all of that. And she's charting all of that at whatever percentage that I'm allowed. Is that a fair way for me to think about it, Amy?
Yes, it is. I pay my employees to ask you those questions as they come in, because then you're not going to remember what you did back, last June when you went out on the 12th of June, met with a client. What was that nature of the meeting? No one's going to know. Does that make sense? So we try just to take care of it as it comes in, because it's a lot simpler to answer the question 2 weeks in advance instead of 6 months. So.
Yeah. And I'm just going to ask the question for everybody, and including me, because I was out with some people, it happens from time to time, not more than like every other day. But people ask me, because I just crumble up my receipts. And, when I'm even with clients and they ask me, hey, don't you keep your receipts? And I'm like, no, I don't keep receipts. Am I in the danger zone here?
You will be. Because when the auditor comes and say, I would like to see your meal receipts, they're not going to be happy with just a bank statement. They really, really want the receipt. Now, the chances of being audited, you're probably 1 in 10 years to be. Does that make sense? It's not a large percentage if you're managing your accounts correctly. So if you send out red flags, you're probably going to have a better chance of doing it. But if you keep it consistent through year to year and you're not sending out those red flags, that's why you hire a CPA, is to check those red flags. So I try to check my clients as much as possible, do a little mini audit every time I do a tax return. So it's just a matter of, yes, you will have a little bit higher chance if you ever get audited that they will disallow that expense if you do not have a receipt.
Unfortunately, I'm going to give you a lesson here. See this thing? It's full of paper. These are all my receipts for meals. Like you just need to get yourself one of these, man. Love it.
That's what my husband does. And he doesn't even do it per month. He just drops it in. So
I have no idea how I'm going to get all these back in there, but yeah. So then we will take all these, add them up and put them into an Excel spreadsheet and send them to the accountant and then hope and pray.
Yes.
I don't really need this for 2023, but up to 2023, I have used this thing religiously.
Well, good job. You're 1 in 100 that do that.
Lesson number 1.
How many years do we need to keep those meal receipts?
Okay, so the IRS can go back 3 years. So I would keep them more towards the 5-year mark, just for, audit purposes. But 3 years is the audit max. So they can go back 3 years. So for example, they will start doing the 2019 and 2020 audits right now. And then they will probably audit you for 2020, 2021, 2022. So just FYI, that's what they're looking for. So I would at least go back 3 to 4 years. I would say no more than 5. Teresa, thank you so much for uploading them into QuickBooks. That is an excellent way to do your filing system. So if you have QuickBooks Online, you can actually scan your receipt and upload it into QuickBooks. And then whoever's doing your bookkeeping can match it to the transaction when they come in. So that's actually a very excellent way to do it, because then it's just right there. And QuickBooks keeps track of those for you. And they just put it in there and you're good to go. No more worries. So,
and then you can throw out the real paper one, right?
Yes, you can throw away the paper one at that point. So as long as you have a scan or something where you're, so what I do with my husband's receipts is I scan them into my computer, and on a monthly basis, I just drop them in if I don't have time to sort them, because my family is always the last one on the list for bookkeeping and stuff like that. So that's what I do, is I just hurry and scan them in, because sometimes they fade. And so sometimes you do lose them just for fading purposes. So that's what I always do, is scan them in, even if it's just file on your computer, at least you're saving.
Yeah, we just started doing that with Chris because we have filing cabinets and filing cabinets. That's where that bonfire comment came from. So we can light some of these on fire here pretty soon. But we've just started to scan them in so that the bookkeeper can put them with the thing, and then we can just toss the actual invoice in. So
yep, it works out great.
Scanning receipts sounds like a really good job for about like an 11-year-old.
Absolutely. Absolutely. That's what my daughter started doing. So yes, definitely.
So for anyone who goes to my website at Sterling Wyatt, you'll see that this is my chief of security here. This is my people know me. So I'm a golden retriever guy. He's my third. They have all came to work with me my entire career every day. And this guy just had some surgery. And you know, those cone things, I mean, it's not just about tax tips. It's about dog tips here too. So, you know, he was in the cone thing, and all I can think about is he's just beating the living heck out of my walls at my house and my office. So my wife got this donut off of Amazon, and not only has it protected my walls, but he's truly enjoyed it as he is literally snoring on to my left on the couch. So I took this picture and sent it to Sean and said, hey, we need to show this today. So I'm a big fan of the donut, and so is he.
I love it. The donut reminded me of one question in the chat. Is buying ice cream for your children an expense meal?
Are they on your board of directors?
I don't know. I said it would be an employed children.
So I would do more of just a little bit of a slush fund in your management company and do it. Yeah. As a reward, you can do an employee rewards, you know, that type of thing. I would do it. It would be 50%, but it would be at least something.
Love it.
Thank you, Shauna, for putting all that together. Next week, on Tuesday, happy Valentine's Day, ahead of schedule, since it's always fun to somehow, I don't want to say make fun of, but since he's here today, Chris Naugle is going to be my guest next week. Therefore, I know I'm at least getting chocolates or a cold beer or something from him ahead of time. Thank you, Chris, ahead of time. Happy Valentine's Day. But as we continue these episodes, for the people out there that don't know me, again, it's going to be real. We're going to talk a lot about investment channels, alternative investments. We're always going to have the tax as the underlying foundation to whatever we're talking about. It may be life insurance, disability protection, health insurance, HSAs, estate planning, irrevocable life insurance trusts, you know, buying a building, selling a building, buying real estate, investing in real estate, whether it be self-directed IRAs, whether it be cash, whether it be, I ran a question by, I'll give you a preview of it. And then, you know, maybe in like 2 or 3 weeks, we'll talk about it. But Amy was putting together a pro forma. I'm looking to buy a building that is literally about 20 feet from the building that I'm standing in that I already own. For some reason, the seller wants me to buy the LLC instead of buying the building. And that one, that's above my pay grade. So I reached to Amy and said, hey, I need to understand this, but I can assume a mortgage and a couple other things. But it was above my pay grade from a tax strategy standpoint. And Amy said she needed 3 whiteboards to explain it to us today. So we're going to wait for a week or two to discuss that. If you need additional information, you can connect with me through the Calendly link that obviously is in front of you. Shauna did a great job by throwing it into the chat. You can also find it on my website, sterlingwyatt.com. And again, we will continue to hit all of the different strategies financially that we all need to use all over this great country, but always having a tax component to why or the reason that we're talking about it or using it. Shauna, before we jump out of here, it's 1:57 on my computer. Any additional questions that we need to hit?
There's one more that just came through in the chat. Just if you're going into business on your own for the first time this year, what is the best way to get all this set up properly?
I can help you walk through it. It would just be a consult. I bill by the hour. We can just do step by step. Okay, this is the first step, and we can just walk you through it. We want to make sure that you're opening the correct entity. that type of thing. So it just depends on the nature of your business and how big you think you're going to go right from the beginning. So I can do step by step, just walk you through it. And I think that would be a great way just to start off right. I do this all the time with lots of different clients. So I think that would be the best bet, is where to start, is open that entity would be the first step.
Yeah. Shauna, last thing I want to make one other point, and then you can close us out. But, after 2 weeks ago, hosting Chris's Wealth Wednesday webinar, there was a number of people that reached out with different questions. I obviously have my own working relationships all over the country. That's a really good question. I don't know who asked that question, but your needs are going to be different. There are people that are in their 20s and 30s that are, launching different businesses, or maybe it was a side business, side catering or event planning business over the last couple of years, and now you've grown it. And maybe you don't need payroll, maybe you don't need to review your P&L, your balance sheet. But 20 minutes before the show today, one of my really, really good clients reached to me and said, "Hey, I need to switch CPAs. Do you have the tax person?" The answer is yes. Amy and her team, they have all of my business. I direct a lot of relationships there, whether it be just for tax returns or payroll. And then the last thing I'll say is Chris is no different than I. He has relationships with people in their 20s and 30s. We have relationships with people that are in their 70s, that struggle to turn on a computer. We can find you your happy medium somewhere in the middle and direct you. So Amy's contact is all on my website also. So feel free to get in touch with us, and we can direct you as best we possibly can. Shauna, Chris, anything else?
No, I mean, did you want to, so we have all this on here. They can book a call, but they might not have your website. Do you want to put your website on there, or do we want to just put Amy's contact info for somebody that might want to?
They can get to Amy through my website. So Shauna, if you want to throw it up there, it's sterlingwyatt.com. You can go there. You can get to Amy. You can see a lot of our other strategic partners. Some you will recognize through the Money Multiplier Company and the Money School. If there's no other questions, I think Shauna, you can close us out, and we'll get to the 6 o'clock tonight with the big guy there.
Yeah, absolutely. I think this has been super great. Thank you both so much. Thank you, Brian. Thank you, Amy. And thank you, Chris, for making a special appearance today. I know we weren't expecting you, but we'll see you back next Tuesday. And that's all I've got.
Sounds good. Everybody have a great day.
All right. Thanks, everyone.